Hey everybody! Today, me and Ryan are going to tell you 3 steps to not letting your loans F you. So I am making this video with Ryan because student loans are effing over all of the people that are just trying to go to school to get the jobs that they need to get in this shitty economy. And then what ends up happening is you get in a debt trap. And everyone thinks credit card debt is the worst debt and education loan isn't that bad, but it actually is really bad. So today we're going to tell you the 3 steps to not letting your loans F you. And this is mainly for people who are repaying their loans, but also for people who are about to take them out. Okay, step 1 is only take out what you need. A lot of times when you're 18 years old, you don't really understand what a loan is because no one teaches you, and that's awful. So when I took out loans, I was tempted to use them to pay for my rent, to pay for my housing. I would get my loan reimbursement and I would just cash it and use it. Don't do that. Loans are like the devil. Don't take out anything more than you absolutely need. A lot of people say, I want to focus on school, I'm not going to get a job. Don't do that. Try and pay as much of your education as you can on your own. Only take out a loan if you absolutely need to. As soon as you take out those loans, you're already effed. Okay, now we're going to move on to step 2. Step 2 is when you have graduated school. Yay, you graduated. Now you want to change the world, right? Oh, you've got monthly repayments. So the first thing you want to do is they're going to give you some pretty reasonable number. If you've only gone to undergraduate school and you went to like a state school or something like that, you might have a payment that's like $100 or $200. If you've gone to grad school, that starts getting up into $300 or $400. But you got your first job, you say, I can make these payments and I can still live the lifestyle I want to. But what I want to tell you today is that you should F their monthly payment. Do not pay that minimum payment. Pay as much as you can. Throw it in the trash and then figure out your own budget. Figure out what you have to do to pay as much money as possible. And Ryan is going to illustrate why this is so important. Are you ready, Ryan?
I think so.
Okay.
Alright, so let's say we've got a standard setup here. Let's say you took out $20,000 in student loans, and let's say that's at a 7.25% interest rate, and let's say that it's at the standard 25 years or 300 months. And we're going to start you off by paying it back starting January 1st, 2014. The bank recommends that you make a minimum monthly payment of $144.56 based on all these numbers. And so we're going to show you what happens if you listen to these bankers. So the first day you've paid off $144.56. Great. You've dropped your total down to $19,855, and you've paid off the interest or total principal $144.56. And we're going to zoom down here 2 years to January 2016 to see what happens. Okay, 2 years of their minimum payments. So you've paid $144.56 this month. It's January 2016. Except notice this: you've paid $118.52 in interest, and $26 has gone to the principal this month. What's up with that? Well, what happens is interest accrues on a daily basis, and so if you come over here, you see that now you owe on your loan $19,221. Now that's after paying $144 for 24 months now, and you've only dropped it down by $778. Why? Because you've also paid $2,835 to interest. That's the money that the banks get for the courtesy of giving you that money. Right? Catherine?
Yes.
What's the next
step?
Sorry.
The next step. So in order for that not to happen, we've talked about effing their monthly payment. So you want to just take that and throw it in the trash. And what you want to be doing is number 3, be a disciplined ninja. So my loans want me to pay $326 a month on one of my loans for grad school. I now pay $1,000 a month on that loan. Why do I do that? so I cannot let my loans F me over. So you want to be paying as much as you possibly can in your loans. I can't go on fancy trips and I can't do things, but that means that in 3 years I will be debt free and then I can do whatever I want. So you want to be a disciplined ninja. Obviously, this is totally based on your personal situation of where you're at and what you got going on. But just make sure to pay as much as you possibly can, because the point is every little bit helps. You want to F their monthly payment and pay as much as you possibly can by being disciplined ninja. To illustrate how this pays off, Ryan is going to show us on the lovely spreadsheet.
All right, so same deal. We've got 20,000 we've taken out. It's at 7.25, and instead of paying their recommended 144.56, we're going to bump that up to 844.56. And I know that sounds like a lot, and of course it goes directly to these bankers, which we don't want. But check out what happens after 2 years. Zoom down to January 2016. Okay, so now, remember last time where you were paying like 130 or whatever in interest? This time, you're out of your 844, you've paid $7 in interest, and 837 gets taken off the total amount of the loan. Now, instead of owing, and see over here, I've copied the values we had before. So last time we owed $19,200 at the end of this 2-year period. Now we owe them $389. Quite a difference, right? And instead of paying them $2,835 in interest, after 2 years we've paid instead $1,500. And instead of having $770 taken off the total amount of the loan, you've taken off $19,610. Now I know it seems like you've paid them a lot more every month, but let's just do the math real quick. If you paid them the 144, 56 a month for a whole year, but for 23 additional years, right? Because we've paid 2 years so far out of the 25-year total. That comes out to $39,898. That's money that you are now not paying them, because at this point you're pretty much done with your loan. You still owe $389, but you can pay that off the next month. So it seems like a lot, but look, you've saved almost $40,000. That's huge.
You know what that is, Ryan? A down payment on a house.
Yeah.
Get houses. Don't get trapped into debt.
And that's $40,000 the banks don't take from you.
Yeah. F those banks, folks. Do what you can. Be a disciplined ninja. F their monthly payments. Only take out what you need. And those are 3 steps to not letting your loans F you. I hope this is helpful. Bye!